Assalamu alaikum, everyone. I hope you are doing well. You're staying warm if you're in the Northern Hemisphere. May Allah be with those who are in Gaza, who are fighting for not just themselves and not just the Ummah, but everyone who is decent in this world, everyone who has an amount of integrity, anyone who has any type of honor and honesty. The people of Gaza are fighting for all of these people, whether they know it or not. May Allah grant them victory and grant them relief soon, inshallah. All right, so in this live, what I want to do is go over some of my highest conviction picks in terms of what to invest in right now. And without further ado, let's get started. All right, so let's first make note of the obvious fact that this is not financial advice. Make sure to do your own due diligence before making any investment decisions. So I wanted to make note of a rather grim milestone that we've reached here in the United States, which is $34 trillion in debt. And to put this in context, because this is a very large number and it's hard to imagine, as a percentage of GDP, as a percentage of all the goods and services that the US produces, we've now reached 120% in terms of debt to GDP. And we have never reached this point, not since 1945, after the World War. And we haven't been in a world war, and yet here we are at 120% debt to GDP. So with the accumulation of more debt, the cost of servicing this debt, paying the interest on this debt increases. And you can see that in recent years, it's increased exponentially, not just because of the increase in the amount of debt, but also the increase in the interest rates on that debt. This is one of the reasons why I think interest rate cuts are coming. I don't think that the Fed is actually oblivious to this cost that the U.S. debt is costing the U.S. government, even if it claims that it is completely independent of its decision whether to cut rates or increase rates, because after all, it's not the mandate of the Fed to make sure that the US government is solvent. But I do think that this impacts their decisions, whether they admit that it does or not. So what can we do? So I don't mention these things in order for people just to, make note of this grim fact, but for people to understand that all of this debt needs to be paid off. And the interest on this debt is new money that needs to be created, that hasn't been created yet. So as far as tokens go, since we've been talking a lot about cryptocurrencies lately, as far as tokens go, there's no max supply on the US dollar. And we know that dilution is in store for holders of US dollars. So the advice is that, or I shouldn't say the advice, my assessment, what I'm going to do is to make sure I don't stay in cash or cash equivalents, regardless of currency. Actually, the US dollar will probably perform better than most fiat currencies. But regardless of currency, I'm not storing my purchasing power, my wealth in fiat currency. I need to park it in assets, and those assets I would divide into two different categories: scarce assets, so things like Bitcoin and real estate. Bitcoin is capped at 21 million. Real estate, they're not making any more of it. and productive things. So things like stocks and uh, cryptocurrencies, at least the promise of being productive for some cryptocurrencies seems to hold merit, certainly some more than others. And I'm going to share with you three of my highest conviction assets where I will be parking my money and wealth and purchasing power in order to protect it from what I see is the inevitable demise of fiat currencies. So, now more than ever, probably investing is not something that, and becoming more knowledgeable in investing, understanding where to put your money is not something that is a nice to have anymore. It's a requirement because I think the writing is on the wall as it relates to fiat currencies. So the first, as I mentioned, was Bitcoin, or money go up technology, as many on Twitter and other social media like to call it. There are three pretty big catalysts that I see for Bitcoin. Actually, there are more. I would include perhaps the U.S. elections as an additional catalyst for risk assets, including Bitcoin. But the three major catalysts that I see in the near term are the ETF approval, whether this happens in January or March. I think we'll know the answer to that next week. So that's going to cause demand to increase. Rate cuts, which also causes money to flow into risk assets like Bitcoin, that's going to cause demand to increase. And then the halving that's scheduled for this April, which will cut the flow of new Bitcoin into the system in half. So this will decrease supply. So economics 101, demand increases, supply decreases. You have an increase in price. So I may not be, so for PIF members who are watching my portfolio, I may not be, heavy investing in Bitcoin. I may be investing in Bitcoin proxies or equities that have exposure to Bitcoin because I think that there's more upside to those proxies to Bitcoin. But the fundamental thesis behind my investing in any of those proxies is my belief in Bitcoin, which is the underlying asset, which will control the prices ultimately of these proxies. The second asset that I think a lot of people are sleeping on that has gone underappreciated, even though it has appreciated more than 100% in 2023. This is by far my largest holding in my investment portfolios, and that is Tesla. And Tesla is not a car company. That's how you differentiate between commenters who know what they're talking about and commenters who don't. The commenters who know what they're talking about have actually researched this company in depth, know that Tesla is, cars are what they're doing now. But if you look 5 years in the future, 10 years in the future, I think the sale of cars will actually be not the biggest source of income for the company. So if you look at the Tesla bot, which is basically the robot that Tesla is building, powered by artificial intelligence, a general purpose robot, the demand for this robot is potentially unlimited. The market will take as many intelligent robots as Tesla can produce, assuming that they arrive at a product that is actually of general use. And I think that they are the closest company on Earth, perhaps, to that general purpose robot. And that with time will probably be its biggest income producer. Additionally, self-driving, and here I'm talking about the actual software for self-driving, which I think is perhaps, as big of an asset as their physical vehicles, if not a bigger asset. And the reason why is because, if you ride in other vehicles, you may find them competitive to Tesla. in terms of their interior. The range for Tesla is superior, but the other car companies, it is conceivable that they close the distance on Tesla with regards to range. However, with regards to the self-driving algorithm that is using the data that Tesla collects in order to improve itself, that lead that Tesla has right now, I don't think is surmountable by Tesla's competitors. They're simply way ahead of other car companies in terms of collection of data, and that lead is only increasing. And you really can't simulate the real world. Uh, Certainly, uh, your simulation of the real world will never beat data from the real world. And Tesla has that data. Other car companies do not have that data. And so what I think is going to happen, similar to how Tesla became their network of charging stations became the standard in the United States, their self-driving software will become the standard for other car companies, which will be forced to pay Tesla to use their software probably on a subscription basis. That is, if Tesla is kind enough to allow them to subscribe to their software. It may not allow them to, and you're going to see a lot of car companies essentially die once Tesla's become fully autonomous, because they'll simply not be able to compete. It's like selling horses after automobiles became commonplace. You're going to go extinct. And so I think the difference between a gas-powered automobile and a horse is not that much larger. Perhaps it's even smaller than the difference between a human-driven vehicle and an autonomous one in terms of technology. And so the car companies that are not prepared for autonomy will simply go extinct. They're selling horses, and automobiles have become available. And Tesla, the company, it's a conglomerate of some of tomorrow's most promising industries. So whether that's solar panels, batteries, the Dojo artificial intelligence supercomputer that is basically training on artificial intelligence, training its artificial intelligence, making it better. Their robotaxi network that will come from autonomy, and insurance, and more products as well. And then the third sort of highest conviction pick for me today is Salana, which I think is basically killing off Ethereum slowly but surely. So it actually experienced a 300% increase in daily active users in the last 2 months, and it actually surpassed Ethereum in terms of daily active users. If you look at the volume of stablecoins that is traded on the Solana network versus Ethereum, Solana network has actually surpassed Ethereum in terms of volume of transactions. And then you look at the upside. If you say, okay, Ethereum is faster, their transaction fees are negligible compared to Ethereum, and it's easier to work with, it's more user-friendly than Ethereum is, one should logically conclude, or can logically conclude, that a lot of that market cap that Ethereum now enjoys is going to flow and follow the fundamentals, and will flow towards Solana. It will flow towards other projects as well that end up eating Ethereum's lunch collectively. But Solana will be one of the main gainers. And if you look at the difference in market cap, so the market cap of Solana is 40 billion today compared to 270 billion for Ethereum. So that's a 7x difference. So assuming Solana surpassed Ethereum size right now, it would actually 7x from where it was. If you said from where it is right now, if you said Solana would actually would actually take from Ethereum's market cap until it is of the same size as Ethereum, you're talking about a 3 to 4x increase from where it is today. So I think that, a price target for Solana of 300 to 400 is actually maybe conservative. You may see it reach 600 or 700 per token in this crypto cycle. So not necessarily 2024, maybe into 2025, but I think it's plausible that Solana reaches that height. But again, there are other players in the space that I'm keeping an eye on. But for now, I really do think that Solana has a good chance of eating up a lot of Ethereum's market share. And I actually, there's a pretty comprehensive report that Deli Digital came out with today, which actually, this is a firm that actually has had some really good calls in the past. And I do think their research is quite good. They mentioned that we believe Ethereum's dominant market share is bound to deteriorate. And as the largest and most vibrant non-EVM ecosystem, that's the Ethereum virtual machine, we expect Solana to be the main recipient of market share normalization. So that's in their Year Ahead for Markets 2024 report. So these are some of the highest conviction names that I have right now. And as I mentioned, it's very important, regardless of what you think of the picks that I made, it's very important that you're giving some thought into where you put your purchasing power for the reasons that I mentioned regarding fiat currency no longer being a viable option. It's very important for you to see what is obviously coming, which is the deterioration of fiat currency globally. I exclude no fiat currencies from that. All right, so we'll take a few questions very quickly. Wa alaikum salam to everyone who says salam. Are meme coins halal? Well, my take on this is that there's no restrictions in Sharia regarding the necessary utility of what you buy. You can buy something just as a collector's item. You can buy a baseball card just because you like it. You can buy an item not because necessarily you're going to use it, but you think that its price is going to go up over time. If you bought a gold bar, you're not necessarily intending on using it for anything, but you think that demand for it will increase. You're speculating on its price. So at minimum, you're speculating on the price of a meme token. So long as it's not doing anything harmful to anyone, so long as it's not something that is a pyramid scheme where they're taking from older investors, giving to newer investors, so long as it's not something that use your common sense. If something is against in its theme, in its purpose, anything that the Sharia is against, then obviously you don't want to invest in it. But Sharia doesn't put the restrictions on buying something for fun, buying something because you think its price is going to go up. There's no inherent restriction in doing that. But you just want to make sure that you're not part of something that's going to be harmful to others, or something that you think is deceptive. It's not, perhaps you think the founders are deceiving the public with regards to their coin. Anything that you think is a bad idea, stay away from. Oh, well, thank you. I appreciate that, Bashir. Uh, so don't have a good feeling their business model is not sustainable. Okay, we'll have to see. Perhaps I'll do a deep dive on Solana, inshallah, in the near future. SCI does look promising. I would like to dive deeper into it. I I'd like to understand more how their concept of um, parallel processing is actually different from some how the other chains are doing it. I'd like to understand that deeper. But I do see SCI as sort of on the short list of perhaps adding to our crypto portfolio, inshallah. If you have a portfolio under 5K, would you go without Bitcoin and Ethereum if you want to make it big? Yeah, so I do think that, when things are going south, as they did in the previous week, the higher market cap coins tend to do better. The lower cap market coins tend to go down further. And then when things are going up, the higher market cap coins go up, but not as much. The lower market cap go up more. So you want to try as much as possible to be rotating between the different coins. One strategy that I'm inshallah going to share more with PIF members is a pairs trading strategy where I take, for example, Salana and the Solana ecosystem token, and I just pair trade between them. When one goes up, beyond a certain point, I sell a percentage of it, add to my Solana, and then when it's Solana's turn, I shave some off the top, add to the Solana ecosystem token, and so on. I think that can be a very powerful strategy over time, and I think it's one that's well suited for what I think is a bull run that is upcoming. Do you think after the ETF and institutions and huge caps get into the crypto market, the volatility will decrease a lot and possibly won't see 10x or 100x we've seen in the past years? Yeah, so I do think that with Bitcoin over time, the returns are going to become smaller and smaller and smaller, right? The earlier you get in, the higher your potential return. I do think that there's still a 10x here easily. I think there's a 10x in Bitcoin easily if you get in at these prices. But I don't think there's a 100x. Obviously, if you got in when it was 4,000, there was a 100x. So at 40,000, I still think that there's a 10x, but you may find some 100x's in the smaller cap cryptos. However, you have to know what you're doing because it's very easy to get burned in crypto. A lot of these cryptos are outright scams. Many of them are just doomed for failure, and there's not much information you can get about them. Even if you go to like their GitHub repositories, a lot of the commits are just to show that there is activity and there's not actually some real code or a substantive code that's being added to the project. It's just showing that there's commits, but there isn't actual activity happening that's meaningful. So because these are not like public equities, there's a lot of lack of clarity with regards to what's going on with these projects. So you really have to tread carefully. You could 100x, but you could also lose big time if you're not really careful. If and when Bitcoin ETF gets approved, do you think it will drive altcoins like Doge up or down? I think it's going to bring everything up. There may be like a short dip after the ETF is approved, like immediately after. There may be a short dip, which I would take advantage of with buying. This is what I'm going to do. But if there isn't a short dip, there may be a short dip and then a run up, and there may be just we may not have that short dip. But either case, I think when Bitcoin goes up, basically all of the smaller cap coins will go up as well. All right, guys. I'm not familiar with Trias. Perhaps if it hits my radar more often, I'll take a look. Thank you all for tuning in. Take care of yourself. Assalamu alaikum, and peace be upon you all.